Hey, good morning. This is May Valensky with Driving Markets. I hope you're well. Okay, so yesterday the markets in the closing hours tanked. The Dow was down over 500 points and the Nasdaq down 300 points on the back of CPI fears, consumer price index fears. And what's happened is that again and again, the inflation, the ugly head of inflation keeps popping up and the markets are getting nervous. I've been saying this since January, and hopefully you've been paying attention because the markets are going to go much lower. I don't think we're actually even seen the start of it yet. What you're likely to see going forward is probably a 40% drop from the levels we're at, whether it's on the FTSE, whether it's on the DAX, whether it's on the Dow, the S&P, especially the Nasdaq. They're going to be absolutely trashed. And yesterday they were trashed, and they're going to continue being trashed because inflation is here to stay. Even the economic analysts today have stated that, you know what, they got it wrong. Janet Yellen got it wrong. The Fed chair, the Fed U.S. Treasury chair, and other governors and other presidents of the banks, they got the inflation number wrong, and it's likely to get worse. We're feeling it in reality between ourselves and the cost of living. The cost of living is just simply too expensive. However, there is a positive note that back in 2008, personal savings were much lower, and therefore we went into the recession. What happened was there was a serious threat on household income, but today there's a lot more personal savings and a lot more financial security amongst all of those investors and consumers, and therefore consumer spending is likely to stay high. In addition to that, there's a very tight labor market. There's a shortage of labor due to the long-term effects of COVID-19, the coronavirus, the Chinese flu. People are suffering long-term illnesses and have left the labor force, and therefore there is a major shortage of labor and manpower within global industry. So that is a positive note, and that will probably help the Western and most economies not only to survive but to get through this on a positive result. Okay, looking at a couple of other things. Tesla yesterday was up over 5%, 6% at one stage, and then due to the market coming off, it fell all the way down to losing around about $50-60 a share. Now Tesla has been upgraded to a buy, and that upgrade to a buy boosted the shares. I'm not sure I agree with the upgrade to a buy, even though I do like Tesla, but I think the overall high-tech sector will have a big impact. Also, the Chinese car maker NIO, N-I-O, is looking to be a competitor in the electric vehicle market, but I think it's a sell. I don't think it's a buy at the moment. So if you're long of it, stay long, but I wouldn't look to buy those shares if I was getting involved now. Also, there was yesterday, there's dollar strength on the back of potential. There's dollar strength on the back of potential high inflation, and likely that rates will go higher in the US, and therefore I'd be looking to sell things like the euro or the yen. The yen is at a 20-year high, or the dollar yen's at a 20-year high. So that's what's at 134, and that is a significant number as regards the Japanese yen. Bitcoin still hovering around the 30,000. A lot of two-way traffic, but again, I'm calling it down to 20,000. So today, keep an eye on the CPI, the consumer price index. You've got there's a big guide on where inflation is going to go in the States. You've got UK interest rates next week. I'm calling for 50 basis point rise next week in UK interest rates. Yesterday, the ECB has already stated that in July they're going to raise it by 50 basis points. I think the UK is going to raise it by 50 basis points. I really think they need to do that in order to get inflation under control. And that's more or less it. You can catch me on WhatsApp, on YouTube, Instagram, Twitter, LinkedIn, etc. May Valensky, Driving Markets. Have a good day.